Right, good morning then everyone as we head into European trade on Thursday the 12th of September. We'll have a look across markets, we'll see what's going on, what's up, what's down. We had the US inflation print out yesterday. Some kind of interesting moves off the back of it. I mean, slightly more positive than negative, the inflation print yesterday. But I don't know if positive and negative are the correct words, but higher than anticipated, certainly on the monthly side of things. Core CPI at 0.3%, a bit too high. They wanted at 0.2%, and I kind of heads into the Fed next week and pretty much confirms a 25 basis point cut. Not likely to get the 51, and I think probably we saw that priced in directly after the print yesterday, the kind of 2 hours after the print, and then kind of after that stocks just start ripping higher. Maybe they kind of view it as a bit of a way, okay, we've got the interest rate cut, any sort of confusion has been removed, and green light ahead. But the Nasdaq's up over 4% since that sell-off directly after the CPI print. So it's a little bit tricky to work out. That's kind of my theory when it comes to it, is that any sort of confusion from next week is out of the way. We can now start to go into a period of interest rate cuts, and now I can buy stocks. But again, you don't really have to make sense of it. People just want to buy stocks all the time, and that's what we need to do as well. Dollar relatively firm across the majority of the currencies. Dollar's been a bit more positive than dollar's been, I say, a bit more positive than negative, but a couple of the currencies are up, a couple of the currencies are down, so not massive price action or not massive price moves across the US dollar side of things, and really across FX. Stock indexes, main focus of attention over the last kind of 12-16 hours since we've had the inflation print out of the US. Probably a bit more than 16, but about 20 hours. But anyways, Asian shares up on Wall Street, tech boost, and you can see when you come around to the grid, I mean, stock indexes across the board pretty positive. Green across North America, but North America kind of had its upside yesterday. Then it brings us on to European equity futures, and European equities are all up over 1%. Said that the ECB is likely to cut interest rates this afternoon, which we'll have a look at in a minute. Nikkei up 3%, so pretty positive day across Asia Pacific, or across the Asia Pacific region. Commodities up across the board. Oil up across both metrics off the back of that hurricane that we were talking about a little bit earlier on in the week. Crude back below $70 a barrel. It's an interesting one. Oil continuing to go lower, and that is positive for inflation, or prospects for inflation. Kind of puts paid 20 thoughts that inflation may truck a bit back higher if oil continues to make its way lower. If oil continues to make its way lower, it's a positive thing for people over the winter, so it's probably a good thing for most people. Bond yields up across the board. They were up post CPI yesterday. Look at them up, with equities up again. Doesn't really make too much sense, but it is what it is. A repricing of interest rates, 25 basis points next week. That's kind of out of the way, and you go long stocks. But again, I'm kind of talking about this kind of a little bit confused, as you can probably tell. I'm not confused because it does make sense, but again, on the other side, it doesn't make sense at the same time. So, anyways, if that statement makes sense. Australian dollar, Kiwi dollar positivity in line with stocks. That does make sense. That is no surprise with that. Your safe havens in your Japanese yen and your Swiss franc, them down in line with stock indexes being up. That again makes sense. In this morning's session. One of the members of the Bank of Japan did say that the neutral rate in Japan is about 1%, or should be about 1%. A couple of hours ago, that hasn't really reflected in any of the yen crosses, so yeah, we can kind of skim past that bit of analysis and focus on other things, mainly inflation from yesterday and the ECB today. But the reasons why things are moving maybe not so clear, but cross asset correlations are pretty clear. You see your equity markets up across the board, commodities up across the board. Theoretically, from risk sentiment, like, this is kind of how it should work, but in recent months and really even recent years, bond yields pushing higher is kind of interest rates higher, bond yields pushing lower is kind of interest rates lower. So they've got kind of an inverse relationship with stock markets. But I mean, in terms of risk sentiment, how they're supposed to work at this point in time, then your Aussie and your Kiwi follow suit. That is no surprise whatsoever. You can see inflation yesterday. No, I talked about this yesterday. 0.3% up over the consensus 0.2. So still a little bit high there, but not too much of an issue. Core CPI still 3.2%. The fact that it's still trucking along at 3.2% and they're about to start cutting interest rates is, I would say, a slight bit of a worry, but again, we'll have to see how it plays out once they start to cut interest rates. Year over year headline figure, that's back where they wanted, down at 2.5%. That warrants an interest rate cut, a more normalized interest rate. But that core CPI 3.2, I don't know. That's a bit of a tricky one from my point of view. The ECB then, a little bit later on today, 1:15. I can't imagine the ECB has any sort of action at 1:15 today. Right, it's widely known to markets that they will cut interest rates today, likely to cut interest rates once a quarter until they get to September of next year. And they don't really give too much away. Or Christine Lagarde likes to be a bit boring at these meetings and doesn't say anything that gives us a bit of action. So I would be quite surprised if we get massive volatility off this a little bit later on today. I'm not going to be sitting there, when it gets to 144 or when it gets to 114, then flicks to 115, going hammering a bunch of trades. I will personally sit and watch what happens. Listen to her, listen to what she says at the press conference at 1:45, and we'll cross that bridge when it comes to it. But as I said, we're expecting an interest rate cut today, 1.25 until we get to September of next year. I don't know what else she says to to go anywhere else on or to bring people's ideas anywhere else. I'm not really too sure, to be honest. We can see dollar Swiss, dollar yen have been higher post CPI, dollar CAD a bit lower, Aussie, Kiwi a bit all over the place, and Euro and sterling kind of grinding their way lower, so a little bit of dollar strength, nothing major. But stock indexes are where it's at. Yesterday, you can see across the board your S&P, your Dow Jones, your Nasdaq, your Russell. The move higher was led by the Nasdaq, as I said, up 4% from these lows, or just over 4%. So, again, does that make a massive amount of sense? No, not really, but it doesn't have to make sense. Again, as I've always said on these videos, if you just blindly go long stocks every day of your life, you'll be alright in a few years' time. So, oil kind of through this trend line that I've been looking at, or I was looking at. That kind of broke through it kind of overnight, so it's a little bit of a tricky one. But continues higher. Worries about hurricane shutting down oil refineries. Inventories yesterday out of oil didn't really give us much either way. They were kind of flat. No build, no draw, so not much to see there. Gold is kind of making higher lows. Maybe it's primed for a pop through this. I'm not so sure we really get it today, but it seems like it may potentially want to try and get its way through those highs, because it is kind of squeezing. That's what you would call a sort of weak ascending triangle, we'll call it, or a bit of an off ascending triangle, but flat highs at the top, higher lows building up to it. You'd expect, certainly from a technical point of view, probably for that to pop at some time. What to look for today then? I'm not so sure you really sit there and look for euros. Again, I still like cable higher. I mean, the data that we were looking for on Monday throughout this week hasn't panned out for us, but I still like a higher. Once you actually think what should theoretically happen through to year end. Well, I'll probably be a short term buyer of dollars, but I say that maybe. I mean, I still think you'd rather sell dollars regardless of what happened yesterday, regardless of what happens at the Fed, whether it's 25 or 50 next week, which it will in all likelihood be 25 next week. Stock indexes, probably after the moves yesterday, you kind of got to look to be a buyer. I wouldn't want to buy up at these highs. You want to try and buy a dip if at all possible. But you got to keep an eye on the charts and see what happens. So maybe somewhat tricky trading conditions into the end of the week, but I'll see if anything materializes a little bit later on.